Jahangir Aziz, Chief Economist at JP Morgan, is joining in on the show now to help us wade through all the decisions that were taken by the Fed last night. Jahangir, thanks very much for taking out the time and joining in. First up, tell us how surprised are you by the Fed's decision to not kick off the tapering program this month? In fact, most analysts do expect a light tapering.
I think it clearly is a pleasant surprise. I mean, we were all looking at $10 or $15 billion. But I think it's a pleasant surprise. I think market will react positively. It's already started to react positively. I think EM assets will see a very good day. And with that, of course, EM currencies. So I think at least for the short term, I think it will be very positive for capital flows and for EM assets and EM currencies.
What is your sense on the economic data that we got in last couple of weeks from the US? Did it actually present a weak case? Because if you look at the market expectation, there was an expectation that there could be tapering of about $5 billion to come in.
I think it must have played an important role into it. I think the other argument I think the Fed must have had is that, last time in May when they made the announcement that they were going to start tapering, the market reacted very disruptively. And I'm guessing that they didn't want to disrupt the market. So I think the combination of the two, that they didn't want to disrupt the market as well, or at least disrupt the market in a negative way, as well as the slightly weaker data, I think may have forced their hand. But again, even though the tapering hasn't started, I think, all signs still point to the fact that the tapering will likely be done by middle or maybe a little in the third quarter of 2014. So that's still on.
Jahangir, now the Fed has indicated that they need more concrete evidence of growth returning before they can kick off tapering. So do you think that mid-2014 deadline for winding up the stimulus program still holds?
Look, really, I mean, they have always claimed that this is always going to be data dependent. We in the market, of course, did not believe that it was going to be data dependent. But I think they have always made it clear that it's going to be data dependent. The 7% unemployment rate that they, talked about some time back, about that being the trigger for the tapering to start, etc. I mean that will likely be met. But I think there is still concern that the labor market improvement that they have that's happening isn't happening because participation rate is actually improving. It is happening because participation rate is going down, and that's still playing an important role, even though you're getting about 175,000 jobs being created on an average. But I think there's still concerns about the underlying health of the labor market, and that may have clearly played a role. The Fed itself, the staff of the Fed, has been talking about the underlying weakness of the labor market for quite some time now, and my guess is that that clearly must have played a role in making that decision. But again, I think that by all signs of how the economy is evolving, if it is not mid-2014, maybe third quarter of 2014.
Right, and what do you think will be the effect of this on the emerging markets? We did see the Indian markets panicking with rupee weakening, and the Indian equities did take a beating. What is your view on the Indian markets? How do you think they will react to this news?
Oh, look, clearly this is going to be taken positively across Asia. Definitely India. I think both the rupee will strengthen with capital inflows coming in. EM assets will, at least briefly for the month of September, will be again back on the table for global investors. And I think that both Indian equities and the rupee is going to benefit from this sparing of the tapering starting in September. So clearly that's going to be positive. Now, again, the question is, how will people look at this? Clearly, once we go through the FOMC statement and the press conference, and we get a better sense of where their growth concerns are. This is FOMC's growth concerns. And therefore making a call on, is this just a month's relief, or does this mean that mid-2014, that the line that we had on the sand, that's being pushed back? If there is a sense that that line is being pushed back, I think then the EM asset rally could last even longer.
All right, Jahangir, we'll let you go on that note then. Thanks very much for chatting with us this morning and giving us your perspective.